Good afternoon and welcome to the Orlando Real Estate Buzz. We join you every week and bring you the local as well as national news that is affecting the housing market. Today we got a couple different items to go over. One was the Fed meeting from yesterday. Two was the announcement today of the UK-US trade deal. And the third is going over local numbers in the housing market, bring everyone up to date and keep tabs on the market. So let's get started and welcome to the Orlando Real Estate Buzz. So to start off today, we're going to look at Jerome Powell's meeting yesterday, announcing that the Fed was going to be holding rates steady where they are. And this, quite honestly, in about 1 minute, sums up his entire discussion.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite heightened uncertainty, the economy is still in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments.
A timely way to respond. Okay, has the Fed ever responded in a timely manner? No. Doesn't matter if it's Powell, Greenspan, whoever. The Fed is always late to the game. And something he stated in there that really kind of irked me was he stated that inflation is over their current 2% goal. Last it was 2.4%, so very close, very close. Employment still at full, pretty much full capacity right now, but they have lingering concerns. Well, when they didn't have any lingering concerns last year, except for an election coming up, they did a rate cut right before the election. And there was nothing to justify the rate cut at that time. But now they've got worries due to the uncertainty of the tariff markets, and they're holding steady. Why would you not ease up a little bit? In this situation, it was fine. This situation, it's not. I got to say it, admittedly, I think part of it is Powell and Trump do not get along at all, and do not like each other. And to me, this is part of the Fed, non-political being political, in that they don't like Trump, they don't like what he's doing, and they're going to hold steady and not help him push his economic agenda forward. Well, that's fine because things are still pushing forward. And one of those today was the agreement between the UK and the US, with several major items happening. One is the cars tariff being reduced from 25 down to the base rate of 10%. Some joint work together on steel and aluminum, which both countries need to rebuild. I don't know if people know this, but the British steel industry basically had totally collapsed and had to be nationalized. So this should help them revive it. And again, why did it collapse? Same reason why our steel industry has been beaten down so bad, in that China, with their labor costs, can do it extremely cheap, and they've been allowed to dump the steel onto the markets. So that's something that should benefit both countries. The win, I think, on our side, again, is the agricultural farming industries. Number one, we're going to be allowed to export our beef, which was totally closed off. Um, I don't know if a lot of people know this, but Britain has some very strict food um, regulations. One of the main ones, which quite honestly, I'm all for, is no GMOs in their food. Also, we wash a lot of our chicken with chlorine. That's not allowed as well. So so I actually like their standards, and now our producers are going to have to be able to export. We'll have to live up to those standards, but that's fine. That's fine because it opens up markets that haven't been open before. How is this all affecting the Fed and the trade deals? Us sitting down, quite honestly, this weekend with China. Um, I think China is my gut, because they didn't call for it. I think China's going to throw a temper tantrum. I think it's going to be a big blow up. That's what I see happening. I see China sitting down with the U.S. and being, we're not going to do this, and we're just going to storm out. That's my call, which I think is going to happen over the weekend with them. Interesting enough, they've also at the same time have reduced a couple of their tariffs that they had previously put on. So they've blinked. They've blinked a number of times. And with their economy in the situation that they're in, as we've gone over numerous times, their real estate market is in total collapse. All of their biggest developers are all bankrupt. They haven't even been able to liquidate any of their assets. Their unemployment for people between 18 and 24 is up over 20%. You want to have fun, try and go and find some economic statistics for China over the past 3 months. They've actually just stopped reporting any of their economic news because it's not good news. Since it's not good news, they're not going to report it. Their unemployment, people collecting quote the Chinese unemployment has climbed to over 3 million people, and they stopped reporting that. So China's going to blink. I've said this to begin with. Where their shelves, where their grocery store, where the place where they put all their products on on the shelves, and without us, they don't have a market. The EU yesterday themselves, and I find this interesting because they're the ones screaming that tariffs aren't fair, tariffs aren't right. But the EU slapped a 67% tariff on all Chinese products yesterday. So that just closed off China's market there as well. So they're a place where they can dump all their cheap, inexpensive products really has dwindled away. They've got no place to put these things. And you're starting to see a lot of unrest in China, unemployment rate going up, real estate market collapsing. Their debt is worse than ours is. So they're in no position to sit and demand anything at this point. They need the markets to open back up, and they need the markets to open up quickly. What's happening to us, how that's affecting us here in the States, is the biggest thing is the bond market really isn't moving anywhere. We've done a little fluctuation between about 4.20. We had a couple days where the rates went down a little bit and then kind of moved back up. We've been sitting in that 4.3 area pretty steady. What does that mean for mortgage rates? Our mortgage rates are really sitting between that 6.75, 7.25. And they're fluctuating in there depending on the day, how much the market moves a little bit. So it's still causing our housing market to be extremely stagnant. We're not really moving anywhere. But overall, when you look at jobless claims, which fell to 13,000 to 228,000 last week. So the jobs claims really aren't spiking, even with, I thought it would go higher with all the government layoffs, but really have not spiked very much. One thing we did see, and that was in March numbers, is our trade deficit took a huge hit. And that was everybody front loading. They basically were front loading, buy everything you can before the before the tariffs hit. So that we've seen that a lot. So the housing market, we're really still stagnant. Um, the one thing we are seeing continuously, and I think we will continue to see this is a perfect example, is Taylor Morrison and other home builders. KB Homes reported, their report was they lost over $300 million I believe it was the last quarter or possibly last year. Lost a huge amount of money, and a lot of the home builders are in the same situation. So for the first time in history, again, it's actually less expensive for you to buy a new home versus a existing home. It has never been that way. This is really the first time in history that we've seen this. And this is an example of how everything's being cut. Right now, Taylor Morrison, save up to $75,000 on select quick moving homes. What are quick moving homes? These are spec homes that the builders have built that are pretty much completed or actually completed, and they're sitting in inventory and they can't sell them. So what do? They give all kinds of incentives to do purchases. That's just 75,000 on the quick move in. But look here as well. Look at the interest rates they're offering. On select communities, they're offering 3.875% on the interest rate. So you've got 3.875 plus you're getting $75,000. Why would you buy an existing home that they can't give you these types of incentives? It's difficult. It's extremely difficult for the resale market right now. And I think it's going to remain that way until we see interest rates really start to pull back a little bit. And hopefully as more of these trade deals come through, we'll see the easing of that market, and that the spread that we've seen grow between the 10-year and mortgage rates shrink. Again, we went through that a couple of weeks ago, in that the 10-year treasury really doesn't have to come down from where it is currently. What has to come down is the spread between the two. So we need to go from roughly about what are we right now, about 2.75 in that ballpark. We need to get back 2.5. We need to get back down to that 1.5% spread. That alone would cause the market to explode, absolutely explode. Resales will pick up immensely. That 1% makes so many homes that are out of reach right now much more reachable. So that is really one of the biggest things that we need to do. When we come in and we start looking at our numbers for the past week here in Orlando, and thank you, Aura, for getting back our Monday morning quarterback report. I have missed this. I love looking at this. This is one of the first things I do every Monday morning is I pull this up. So because it really does give you a good idea of where the market is. And through the week, April 27th through May 3rd, this was nice. We saw a jump to 593 homes. End of the month, which of course you're always going to increase the number of homes, okay, that gets sold because everybody wants to push it towards the end of the month. But it's a nice jump where you're going from averaging maybe 450. If you jump 150 homes, that's a wonderful thing. It's fantastic. It's great. So that's nice to see. Prices went up a little bit. Our inventory is still increasing as well. So, more people are putting homes on the house or houses on the market. I think a lot of that has to do with a lot of people are, it's springtime, school's finishing up. So, this is a time where you should see more homes hit the market. And I think that little lull we had in interest rates there a couple weeks ago helped people feel more comfortable in putting homes on the market. We actually saw a little bit of a jump in the condos as well, up to 181. Believe it or not, we haven't seen it that high in months. So that's jumped up a little bit as well. Then we come in and this was some interesting numbers that we saw overall. And one of them is the months of inventory. Even though we've increased the number of total homes on the market to close to 8,800 homes, our months of inventory dropped to 3.46. And the reason why that's going to drop is because with more homes selling, we're going to cut down the months of inventory that's on the market. And then the other numbers we always look at, which is the original list, the sales price, that percentage, you're still seeing some good discounts. On average, about a 5.5% discount off of the original list price. Which that can be quite extensive for houses in certain markets. Our average days on market, we're still holding up there well into over 60 days on the market. And I don't see that changing really anytime soon. And then you see here we lost our days on market for a few days or for a few weeks, our weekly report. But you see that we had done a slow and steady climb in homes for sale. We're still fairly low compared to other years. They're projecting still roughly about 4 million homes nationally being sold, which is an extremely low amount. But seeing a little bit of increase is always great to see. Always great to see. So the market, you can feel it kind of loosen up a little bit. I'm starting to get more calls, more showings on my listings that I do have, which is great to see. You're still seeing a lot of price decreases in the market as well. So buyers still, I think, have the advantage overall right now. They've still got the advantage. And they're going to hold that advantage probably, I would see, at least through the end of the year. So if you're out there, if you're looking, don't get anxious. Don't feel anxious. Don't feel like you've got to jump onto a house per se right away. Look at it. Look at the patterns. When are people cutting? Generally, you're seeing people cut their prices after 30 days, 21 to 30 days. So when you see the first price cut. So if you're fairly close, watch it, and make sure that, you're looking at the comparables and truly seeing what prices are. For instance, I've got a townhome I'm selling. A year ago, they were selling at roughly $340. This year, they're selling at roughly about $320. So there are areas where you are going to be able to take advantage of price decreases overall in the Orlando market. There's some spots that are holding steady and actually increasing as well. So you've got to be very specific and make sure you're targeting exactly where you want to look. Thank you for joining us today. We look forward to seeing you every week here at the Orlando Real Estate Buzz. Have a wonderful week. God bless. Bye-bye.